We are currently looking at a British pound US dollar 60-minute chart. We see that the market has been making these modest downswings, and now we have a bear flag here. Let's just roughly map this bear flag out. So we have a bear flag, and let's just see where we are on the larger time frame. You see that price has been making these lower highs and lower lows, and currently we are here. Let's expand it out to get a closer look. Price has released from this bear flag and has fallen. It is consolidating now, awaiting on an economic report. Price comes down and spikes low. Now here's what you want to do at this point. You see that this spike low, that the MACD is in a state of divergence, so it has not made lower lows, it's actually making a higher low. And if this continues, if this rejects and starts to move up, then this would leave the MACD in having formed a higher low, which would be a divergence pulling price up. That's fine, but that's if you're looking at MACD standalone. What I want to know is this. You see this level right here? You see this low right here? I would want to go to my higher time frame, look back, and see where this low is relative to what has happened in price in history. This level right here may be a very distinct level on a daily chart or a 4-hour chart in recent weeks or months past, an area at which we can expect a bounce. So if I see price move aggressively toward this area and the MACD is in a state of divergence, then I would be willing to go long here, to buy it here. And I would actually probably, if this was a level of support, then I'd probably want to buy it as close to that level of support as possible. We see a bounce already of a low of 26, a high of 93, all right? So we see a 70 pip bounce. And price continues to move up as we see the MACD lines moving forward and starting to shift through. We see that price has released, and even from this move from down here to this high, if price continues to move lower, we still have a nice opportunity or a lot of pips available in order to profit from. Price consolidating into the next day and now moving modestly higher. Furthermore, if this comes down to test this level, then I'd be even more interested in taking a long here. If it comes down and tests and shows weakness, then I'd really want to see a long at this stage. And as of today, price is here and moving upward. Looking at a US dollar Swiss franc daily chart, and we saw a nice trend up here, a very nice trend, then a very topish formation. See the section on reversals to get more definition and understanding of this. Very, very nice reversal. Price falls through support here and has a swing low point. It retraces naturally. Last level of support becomes resistance and continues to provide resistance as the market gears up for another leg down And as we move down, we head towards this 200-day moving average. In the meantime, the MACD is diverging. It naturally it just retraces as a result of this aggressive retracement. 1, 2, 3, 4, 5 up days in a row. And now we need to see a real strong, steady. The faster the move down, the higher the possibility of divergence. So if we see a nice, strong, steady move down, then we may not see a divergence, and in fact we may see MACD continue to move lower. I like it when MACD gets to this oversold extreme here as a result of this aggressive down move. Price comes down and touches the 200-day moving average, which is a natural level of support and resistance. That's good. We are in the state of divergence now. So if price turns here, then we will see the MACD turn here, and it will have made a higher low than the previous. In this case, as price is moving down, you want to go down to your daily analytics, to the 1 hour and 15-minute charts, and you want to closely watch what price is doing at or about the 200-day moving average and try to trade it long, because if it bounces there, you should profit just on the bounce, even if it decides to continue to move down. In this case, this is a Friday. We move into the weekend. Now look what happens. Price opens on the weekend. It comes down, tries making a lower low than the previous day. See the section on daily highs and lows. If you want to get in on mega moves and get in on good position trades, watch the section on daily highs and lows. Absolutely consistent profits shown in that section. Look here now. On your smaller time frames, you should see, on this day, you should see a MACD divergence as a result of this low being lower than this one. Okay, so that's what you'd want to look for, is a MACD divergence. This is a very good opportunity for a position trade, because if you see here, let's move one more candlestick. MACD is now, as a result of the next day being bullish, MACD is now diverging in a full state of divergence. Price naturally just bounces here at this last level of support. It just bounces here. There's a trade right there. Okay? If you got in this long trade here as a result of this divergence, this double bottom at the 200-day moving average, you could have taken nice profits up to this bounce right here, and this bounce could be independently traded. Look. Reached the low, high, low, 27, 330 plus pips on this move here. Do you think you could have got 20 or 30 there? Absolutely. Okay. And price then continues up. Hello? A bounce? Hello? So, very nice divergence on a daily chart. The divergence on a daily chart are extremely powerful, but you need to go down your smaller time frames in order to get a close-up and refine your entry.